Hello everyone, Financial Fanta here once again. You are watching FANTAVISION, and today we are going to break down Operation Restore GameStop. That is correct. These activist investors have made this whole program of how they want to restore the company. Now, a lot of people are wondering, Fanta, are they really going to fix the company, or are they just looking to cash out? Now, there are mixed concerns and feelings and thoughts and all these different things over in the subreddit and many places online, but let's take a look at what they propose and we'll come to our own conclusion today, and I'll have you guys let me know in the comments down below. Of course, definitely like this video. I basically had to take a financial course to understand half the language, and I still only understand half. So let's go ahead and just look at this first slide when it comes to how, in fact, they are looking to fix the corporation. So here are all the issues, the things that they want to do about it, and showing just GameStop Restore, this is causing a significant upside. The first issue is the bloated cost structure, and the fix is aggressively reducing the SG&A, which is basically all of the different business expenses that have to go along with their business. Undisciplined capital allocation, and they're going to address the liquidity concerns, which means they're not using money in the right areas and they need to be using what they have better. Poor strategy and strategic focus, and they're going to fix that with an articulate long-term strategy, which is what we'll be breaking down today. Lack of shareholder advocacy, and they're going to align compensation with shareholders. And again, that's something I'm going to break down later on, basically having to do with what's going on in the corporate level and how much they're getting paid and exactly how many shares that these executives and board holders own, which is really interesting. Poor culture and leadership, they're going to fix with established corporate culture which values all stakeholders, and that includes people that are working at the bottom rung. And you know what? After reading this, I'm not going to come to any conclusions yet, but I gotta say the fact that they're actually even focusing on that, that's a great thing. That's a great step forward. So here's the first slide of aggressively reducing the SG&A, which is of course the expenses that are going on. And as you can see, the expenses keep rising and taking a massive chunk out of the profit. I mean, 85.6% in 2018 is absurd. And they're saying that with their plans, which unfortunately they don't really show in this, because I'm sure it'd be a very long-winded thing, and that's why they wanted to get on the board in the first place. They're saying that they can save a potential $146 to $517 million. That's huge. So if they're really able to save that much money, they could actually restore GameStop, because that's a massive chunk. There's one thing I want to point out from this slide about the liquidity concerns, and that is the fact that they are actually looking to take on more debt instead of just handling the debt they have. Now, it sounds bad, and a lot of people look at this slide and think, this is proof that they're going to run the company in the ground. This is proof that they don't really care, that they're going to be reckless, that they're being too risky. And I understand that it definitely sounds like it. They want $400 million more in loans, and that sounds like a lot. But currently, I guess there's a market where it's a lower percentage rate right now. They could take advantage of that. And sometimes you need to spend money to make money. And this is a huge, huge indicator of that. That is exactly the mentality that they're using. There's a lot on this slide, and I'm going to try to break down just what's important. Articulate viable long-term strategy. Better leverage the company's knowledgeable and passionate employees who are gaming experts and effective influencers. This is basically saying that you have a staff of very knowledgeable people. In a lot of different stores like Walmart, Best Buy, there's nobody that's really specified in a specific area. Yeah, they're assigned to that area, but 9 times out of 10, that employee does not care enough to learn about said department in order to actually provide any knowledge and real information that a customer can use to purchase items. Now, at GameStop, you are specified into video games, and most employees that work at GameStop are into video games. So if they're in the hobby and they're able to sell to customers, you need to leverage that. But unfortunately, you're not really rewarded for being a knowledgeable associate. All you're looked at is for how your numbers are, and whether or not you're lying to customers doesn't really matter. It doesn't matter if you're actually a knowledgeable person or if you're making shit up. Harness the full value of the trade-in business, which benefits from network multiplier effect, which basically means take advantage of the fact that you have also Part of the second point as well, utilize the large physical store base and Power-Up Rewards program to build a meaningful and powerful gaming community, which is increasingly important in the gaming ecosystem, which is so true. You want to have an actual community that wants to come to your store. You need to harness the fact that you have physical locations where they can trade in video games, and the more people trading in stuff, the better for the company. And I'm wondering if they mean in this area, we need to start giving more and better trade values. We need to give more money to the customers so they're more likely to tell other people. They want to build that network, have more people trade in. Because the more people that trade in, the more used games they have. The more used games they have, the bigger the chance they have to sell. And used games are where they make all their money. Now, I've talked about a lot in Tales from Retail and just the series as a whole, that most of these stores and companies, especially GameStop, do not use the carrot and stick method. They just use the stick method. They only have things bad for you if you do not hit numbers. You are not rewarded in any aspect at all if you reach your goal or exceed it. None at all. Nothing. Zero acknowledgement. Nobody cares. This middle point, implement store-level profit improvement initiatives to ensure a long-term, sustainable store operating model. If you are implementing initiatives, store-level initiatives to ensure long-term and sustainable store operating model, that sounds like carrot to me. It sounds like they're actually going to be rewarding people at the store level. They're going to reward people for doing a good job, which shouldn't sound like rocket science, but apparently it took this long for somebody to, oh, you know what? Maybe we should be nicer to the people that work for our company. Maybe we should incentivize people doing well, besides telling them you'll lose your job if you don't. And of course, the reason I think that's what this means is because the invest in the future portion of this slide. Recognize the value of frontline employees and invest more into training, job satisfaction, and career development. Job satisfaction is key here. Job satisfaction is why I believe that the other point was about actually providing incentives, real carrot, real reasons for people to actually do a great job and continue to do well in stores. And it's going to make people come to work not dreading the fact they might not hit their numbers, but looking forward to the fact that they might be rewarded by doing well. Now, there are a couple things I want to break down on part 2 of Articulate Viable Long-Term Strategy and how they're going to actually implement that, and that's right here. More than 5,500 stores with approximately 14,000 full-time employees that are viewed as subject matter experts and key influencers with customers. This means that, again, these are knowledgeable people and they can be used in order to actually show their love of gaming to the customers, and with that love of gaming and their job, they can make people want to buy more things through their excitement. And when my GameStop store was not being held down by corporate and told that you need this many numbers, you need this, all this strict stuff, you have to hand out pamphlets, we're going to watch the cameras, all these different things, we were excited to come to work. We were excited to tell people about our favorite hobby, which was playing video games. And if you utilize those people, they're going to influence customers to spend more money organically. It's not even going to be a thing that you have to constantly pester people to do, because they're just going to want to. They're going to want to talk about video games with the customers because that's their passion. And that's the point, is that they work there. Obviously, they like video games. Harness that. The second point, as gaming grows increasingly social, GameStop is well positioned to become a gaming hub. This is basically saying that we need to try the store model that they were slowly implementing into a couple other test stores. We need to make it more of a hangout and less of just a tiny hole-in-the-wall game store where you need to get your shit and get out because it is just so cramped and awful, you don't want to spend too much time there. They want to change the narrative of what GameStop is viewed as. They want it to be the place where people hang out. Now, of course, that's not an option right now. We've got the COVID pandemic going on. People aren't going anywhere. And I get that this is a good idea for maybe for the future. Right now, it's definitely not something that they can do, but I get where they're coming from. I get that they want to make them into something new. Part 3 of their long-term strategy, I pretty much agree with all of this. But let's just pick out a few points here. As a result of the board's missteps, GameStop's credibility has been destroyed. We talked about this so many times, even in this video, about how GameStop's reputation is garbage. And because of its terrible reputation, people are more likely to shop anywhere because you have a choice of any store to buy your video games at. So why pick the place that everybody hates? Customers question the long-term sustainability of the PowerUp Rewards program and whether trading commitments will be honored. This means customers think that the store is going to go under at any point. Why do we care if we're getting points for a company that is going to go under, and we might lose all of our trading credit if we trade in our games there? As a customer, I've had these same fears, and I've actually cashed out all of my store credit. I've canceled all my pre-orders. I have $0 invested into GameStop because I don't believe in the sustainability of their company. I really don't. I think at any moment this company could be gone. Any moment my stores near me could close down, and I hate their website, and I refuse to use it. Because of that, because of the lack of faith in their company, they're losing repeat customers and they're losing potential new customers. So they need to fix this ASAP. Slow drip of store closures has eroded employee morale and led them to question their job security. I've talked about this many times, how I feel sorry for people that still work at GameStop for this very reason. You have no idea if your store is going to be open tomorrow. You have no idea if you are going to be laid off, because they're laying off so many different people. And when my store closed, they were not going to give us any heads up at all. And the heads up we did have was like a couple of weeks. So they were going to tell us on maybe the last week just to pack up. And that's not good for employee morale for so many different reasons. If they're not working there anymore, they're going to spread the message, don't work there because I lost my job with zero warning, and you could too. Vendors have discounted GameStop's involvement in their future. Vendors are the people that come in and set up specific displays. We're talking about like the Amiibo thing, where you can see all the Amiibo, Skylanders, and that giant setup. We're talking about the Nintendo guy that comes in and puts new stuff on the different consoles and the systems. And if they don't have vendor support, they're going to lose all in-store game demos. They're going to lose a lot of interactivity, which I've noticed from GameStops. I used to talk about in all my other videos about how I had a bunch of demo units and how awesome that was. We had a Wii U, Xbox One, PS4. We had a 3DS over in the corner. We had a Vita at one point. We had so many different things in the store that people could interact with and make them familiar with the product. And with that familiarity comes sales. So if you don't have that familiarity and you don't have these interactive things that make people want to come into the store itself, you're losing customers again. So if you're losing the vendors, you're losing customers. It's that simple. And the thing that really drives this home at the bottom of this slide about what deep shit this company is in, you look at this bottom, these factors, all these factors they talked about, have likely contributed to over a 100% short interest in a stock price decline of 85% in the past 5 years. Short interest is people interested in shorting the stock instead of investing in it. Shorting is betting against the stock. They are betting that the stock is going to crash. That's what they're betting on. 100% interest in that, and an 85% decline in their actual stock. That's huge. And right above that, debt holders have an unreasonable concern of potential insolvency. I don't see how it's unreasonable, their level of concern, because that's, again, why I am not invested in GameStop and why most people aren't, and why there's that huge short interest. Okay, for this slide, again, proves my point about how executives are being overpaid at GameStop and why that needs to be fixed. I know some people have bought into what corporate mouthpieces have said about how executives need to be paid a bunch of bajillion dollars. They need those bonus sign-on incentives. No, even they agree. The rich people that are investing agree that these people are paid too much. So rich people are pointing the fingers at other rich people at this point. It's not just me. So here we go with better aligned compensation. Executive base compensation should be adjusted to levels in line with similar market capitalization peer companies. They're overpaid, basically. And also, they should require a higher stock ownership level to be an executive. I agree. Same with the board. Require higher stock ownership levels and reduce cash as a percentage of overall compensation. Basically, make more of their compensation stocks. Keep giving them more stocks, give them more shares, give them more reasons to care about how the company is doing so that they'll actually do something to fix it. If they have no incentive to fix the company and they're just getting paid hand over fist to do a piss poor job, what is their incentive to do better? If they are selling their stocks left and right, barely buying and reinvesting in the company at all, what's their incentive to keep working at the company and making it better? And again, the board compensation is out of line with companies of similar profit and market capitalization profiles. Even the board members are overpaid. The fact that they even have to say require higher stock ownership levels shows you how little even the executives and board members believe in this company. I think everything is important about this slide, so I have nothing to red box because it's just, let's just read through it real quick. Establish corporate culture which values all stakeholders. That's including customers and employees at the top level. Instead of having the shareholders at the top, like a lot of different companies, including this one right now, sees it, you need to value your customers' employees. You need to create the value there because that is what creates the value for the shareholders. Happy customers, happy employees will make a better company. It's that simple. Customers, build a customer-centric culture that prioritizes long-term relationships over transactional focus, aka stop shoving shit in their face. Stop asking them 50 different questions every single time they check out, because if you keep doing that, let me tell you, they're not going to shop there anymore. Employees, recognize the critical value of all, I love how they do this. They have this bolded and underlined, all our employees by treating them with respect and investing in their personal and professional success. I know this should go without saying, but treating your employees with respect, like that's the number one thing you should be doing. Pay them what they're worth. Treat them like they're worth something to your company. Treat them like they are the ones that are filling the CEO's pockets, the executives' pockets, and driving the stock price, because that's where the stock prices are. That's how they get set, is the sales of a company. Who creates the sales? All the employees in the stores. That's where the sales are coming from. So if you want better sales, maybe treat the employees with some respect. Just a thought. And something else besides treating with respect that I really want to point out is the fact that they're talking about professional success here. Taking a lower level employee and having them go through all the different ranks and encouraging them and training them and having them become involved with this company. I mean, that's going to be the most valuable employee to you. So many different places cause high turnaround because they're not paying enough attention and they're not pushing their employees to do better. They're not encouraging them to get promoted. They're not encouraging them to not only achieve higher goals in life, but in that company itself. They're just not doing it. And GameStop certainly wasn't doing it. They made it a pain in the ass for so many people to actually get to store manager. If you want to get to store manager, you had to jump through so many bullshit hoops. Had nothing to do with how well you were doing in the store. Had everything to do with politics. And they need to fix that. Vendors, leverage unique role as the industry influencer through knowledgeable employees, Game Informer magazine, and Power Up Rewards program to deliver additional value to vendors. They need to keep attracting people to advertise in their store because GameStop does get paid to have those advertisements up. Those companies are paying to put up those giant posters. They're paying to fill all those game cases on the wall. They are paying all these different things. And if they don't see value in GameStop anymore, they're going to stop paying to advertise at GameStop. And then GameStop loses another revenue source. And without all that advertising, I mean, that advertising not only helps that company, but it helps GameStop sell those games, which then in turn creates more profit. So it's a win-win scenario for vendors to be a part of GameStop. And GameStop needs to show that they are still valuable to these vendors, or they are just they're gonna die. Shareholders, demonstrate commitment to shareholders by aligning compensation, stop overpaying executives and board members, implementing and maintaining rigorous cost controls, stop wasting money, increasing transparency, stop hiding what you're spending the money on, truly listening to their input. They had to force their way onto this, and they've provided lots and lots of different advice in the past that GameStop has completely ignored, and returning significant capital to them when financial conditions permit. So those are the plans. Those are their plans to dig GameStop out of the hole. Of course, some of them are a little bit vague because they're obviously not going to put every single little detail in this presentation. They're just not. They don't have time to do it, and I'm sure I mean, this is already a long enough presentation without doing that. Plus, they don't want to just give away their strategy until they were on the board itself. This was before they got on the board. This was just trying to get a vote. And that's why I had to download this from the Wayback Machine. Now let's go over a couple slides that will answer the question about whether or not these ideas are actually in GameStop's favor or if they're just kind of BSing and they just want on the board for other nefarious reasons. So let's take a look at what GameStop has claimed and what the truth is. And we're just going to go ahead and go through this really quickly. First of all, I didn't red box the top part, but I just want to laugh at GameStop for a second because why not? GameStop has claimed that GameStop has undertaken sufficient change. Well, it's doing terrible, so no, it hasn't. I just like that first part so much. It's like, oh, we've done enough. And then you look at the numbers and go, apparently you haven't. GameStop claims that more change would be disruptive. But the fact is that GameStop needs constructive disruption. Yes, they need to actually change what they're doing. They keep going down the same road they have been. You need to change lanes if it's not working out. You need to disrupt what you're doing now and do something different that is going to benefit the company. GameStop claims that Hestia and Permit nominees, which are the activist investors, but their nominees have decades of financial, capital markets, and turnaround experience. So I would say that that's pretty good if they've got turnaround experience. If they have company turnaround experience and that's what the company needs, maybe they should have people on the board with that sort of experience. There's only one claim on here that I want to address really quickly. GameStop claims that Permit and Hestia are short-term investors who wanted a large share buyback that would have left the company weaker. But Permit and Hestia have actually been invested in GameStop since 2011 and 2012. They're committed to actually see it prosper because they have what they like to say over and over in this slideshow, skin in the game. A lot of these people have lots of shares in the company, which is how they got on the board in the first place. They own a decent chunk of the company by now. And because of that, they want to say, and they want to see it grow. They want to see their investment grow, and they want to see the company do better. So overall, I don't know if their plan is going to work. I really don't. I mean, we've seen the numbers tanking quarter after quarter. We're seeing reported losses. We're seeing all these different things happen. We're seeing how they handled the COVID pandemic. We're seeing all these different missteps. Now, they've recently joined the board of directors. We'll see if the changes start happening, but this is going to take time. This is not going to be something that happens overnight. All these different changes and things they want to address, they don't own the company now. They can't just make these changes without board approval. They still have to, convince everyone else on the board that these are good ideas. So it'll be interesting to see if they're actually able to influence anything at all or if they're just constantly outvoted. I don't know. I hope that they do. I hope they can actually turn the company around because I know a lot of people in the comments section, the last one said, GameStop is dead. Let it be dead. It's too late, too little, too late, all those sort of things. But I will still reiterate there are lots of people that work there and there are lots of people that, this is what they enjoy. They enjoy video games as a hobby. And, at least they somewhat enjoy their job. And I feel like if they really do invest into their employees, they really do train them, they really do respect them, they really do provide initiatives and actually want to see the morale go up, we could see GameStop becoming a better place for everyone. So, I don't know. I'm also a little bit biased because I like physical copies of games. They're the bastion of physical copies. It's easier to buy stuff from them than eBay. So if you ever buy any used games at all, most of the time their prices are better than mom and pop shops from what I've seen. So we'll see what happens. I believe them. I believe that they care. Like I said, they have shares in this company. They have a lot of money invested. And because of that, why would they not want to see the company succeed? So I believe them. I hope they can succeed, but I guess we'll just have to see. Let me know what you guys think in the comments down below. If you think they will, if you think that they're actually caring, but like I said, we'll see. Like the video if you guys liked it. Subscribe for more content. And as always, have a fantastic day. In case you were wondering, today I was drinking some Bullet Bourbon, which doesn't taste nearly as good as it used to when the bottle was a lot more full, but all that air, I don't know, it's kind of changed the flavor. It's not as strong as it once tasted. It's got a lot more burn to it for sure. But I like Bullet. It's usually really smooth. For some reason, I can't handle it right now. I don't know why. A lot of people have said that they like the whole financial Fanta character, so I might do more series like this in the future on other companies and how they're doing. I don't quite know how I'm going to do that yet. Just kind of workshopping the idea. Still working on the evil companies idea, but I had to do a lot of research into this video because there are lots of different terms and stuff that I did not know because I was not into, I didn't get a business degree. I should have, but I didn't. So I actually had to look up a lot of the different terms they were using and different business jargon and stuff like that. So I had to kind of get off that one track, get on this one, and now I'll go back to my research on evil companies. Of course, I'm still taking suggestions for Tales from Retail on Discord and in videos. The easiest way, I think, is probably in the Discord channel because I've got a specific area. It's much easier just to scroll through that than to just wade through all the different comments and stuff like that. But I am really happy that the last video did really well. I hope this one does as well, and I'm glad to see you guys are all enjoying it.